Good morning and happy Friday to all you magnificent melon heads. Today is March 24th, 2023, and welcome to another exciting episode of We Are Financially Strong. And the star of today's show is Deutsche Bank and Binance. Both of them are not failed, wobbly, I don't know what you want to call it. Deutsche Bank shares are selling off hard in the morning. They were down as low as 13-14% a few hours ago. Right now, they're bounced back a little bit, down 6 or 7%, but we had a blowout in CDS for Deutsche Bank yesterday. Now, a CDS, that is credit default swap. That's insurance on a bond against default. So the cost of insuring Deutsche Bank's bonds has gone through the roof over the last couple of hours, and that's why shares in Deutsche Bank are selling off. When people see the bond market is saying, I don't have very much confidence that you can pay me, it makes people think, I don't want to own stock in this bank anymore. And so they start selling. Well, when people see the stock in a bank is selling off, that makes depositors go say, maybe I shouldn't have my money in that bank. Maybe I should move it over. And it turns into this feedback loop, and that's how a bank run manifests. And, well, typically what a bank would do is they just issue more Tier 1 capital. I'll just sell more of those AT1 bonds. I can raise the money I need to stay afloat. What a great idea. Oh, that's right. Swiss regulators destroyed the market for Tier 1 bonds when they threw out the capital structure to bail out Credit Suisse last week. Remember when I was saying that these regulators, when they're making things up as they go, changing the law, changing the rules, or just breaking the law in the middle of the night in order to save these banks, that is not how you restore confidence in the financial system. That's how you make things worse. Ta-da! Today, Deutsche Bank is teetering on edge, and their options for raising capital are now more limited because of what the Swiss did. Elsewhere, we've got CZ, who is arguably the biggest dirtbag remaining in the crypto sphere, and that is not a title I throw around loosely. He's probably runner-up with the guys over at Tether right now. Well, they just went down totally, of course, for maintenance this morning, halting all withdrawals, all deposits, all spot trading because of a glitch. Of course it's a glitch. It has nothing to do with the bank run, nothing to do with the collapse of other crypto exchanges. I'm sure it was just a glitch. And I have the bobs in my ear going, we fixed the glitch. We let these things take care of themselves. Plus, we fire people on Fridays. Things tend to go better when we do that. It's an Office Space reference, by the way. So, yeah, we are financially strong. CZ was saying it a few weeks ago. We had German Chancellor Olaf Scholz is in the press saying Deutsche Bank is profitable and that they're financially strong. Everybody, please stop telling us how financially strong everybody is. It's not going well. Every time someone says we're financially strong, it's like, well, that's who we sell next right there. Meanwhile, let's go to our chief financial correspondent, who is 6 degrees removed. Let's go to Mr. Kevin Bacon here. What do you have to say, Kevin? Oh, okay. Well, Kevin Bacon would like to remind us all that things are well, that our financial system is strong. Thank you very much, Secretary Kevin Bacon, for that wonderful message. All right, let's shrink my big melon of a head and see what's going on in the world of stocks right now. Oh, big red candle down at the open. S&P at 39.23, down 25 points, or 0.65%. The Dow is down 171 to start, about a half of 1% at 31,933. And the NASDAQ is down 0.55%, or 65 points at 11,722. Meanwhile, we've got the DXY gapping up today at 103.21, up 68 basis points. My guess is this is due to Deutsche Bank. People are getting out of European banks saying, well, why not head over to the United States where I can get free insurance on my deposits, because Janet Yellen and Jerome Powell and the FDIC just threw out the rules in the middle of the night to save Silicon Valley and to save all the big tech investors over there. So might as well get your money out of European banks and go over to the American banks. It's almost as if when you change the rules in the middle of the night and you just throw out everything, that it causes problems. All right, meanwhile, let's take a look at what is happening in bonds. And I've got my iPad is acting up on the side. I don't even know if this live stream is working, but we're going to keep going anyway. We have got a big gap down in bonds this morning. The one-year Treasury is at 4.19%, down 18 basis points, or 4.22 this morning. We've got a flight to safety on the long end of the yield curve, folks. Bond prices are rallying, driving yields lower. And take a look at the 10-year yield. Look at the flight to safety since mid-March, since this bank run started. Everything just heading lower and lower. All right, hold on one second. I'm having all kinds of things going on. It looks like we're still live, so I'm going to keep going as if we're still live here. My computer is getting glitchy. I guess I said too many mean things about the financial system, and they're saying it's time to cut Jack's feed. Looking over at commodities right now, we've got gold is up another $6, still over 2,000. Congratulations, gold bugs. We've been struggling to retake that 2,000 mark for a while. A lot of people are saying we're due for another AM price smash. We'll see if that happens. I don't know, but right now sitting at 2,000 pretty. Silver also looking good at 23.56, up another 31 cents this morning, or 1.33%. And I'm getting a text from Mish. He's saying you're fine. Everything is fine here. We're all fine. How are you? All right, moving on. Crude oil is down $1.69 at 68.27, or 2.42%. So oil still selling off. Again, folks, we are on the brink of the mother of all recessions, possibly a depression. So I'm not surprised to see oil prices heading lower. So much for that Chinese reopening causing a surge in oil demand. Has anyone, someone in the back, have you seen that Chinese reopening? Anybody? No? Okay. Moving on. Natural gas up 4 cents this morning, or 1.95% at $2.19. Natural gas remains the widowmaker trade. But here we go. This is the big story this morning, folks. Deutsche Bank shares plunge in renewed bout of stress. The latest bout of stress comes days after Credit Suisse rescue. Financial sector is suffering widespread share price declines. Deutsche Bank became the latest focus of the banking turmoil in Europe as ongoing concern about the industry sent its shares slumping the most in 3 years, and the cost of insuring against default rising. And this is important here. This is what you need to know. The bank, which has staged recovery in recent years after a series of crises, said Friday it will redeem a Tier 2 subordinated bond early. Such moves are usually intended to give investors confidence in the strength of the balance sheet, though the share price reaction suggests that the message isn't getting through. So they've got these Tier 2 subordinate bonds. So these bonds are like first in line to get wiped out if the bank fails. And the cost of insuring these bonds was going up. So in the middle of the night, the bank said, okay, guys, we're going to pay back these bonds early. We're going to give you your money back ahead of time just to show you that we're good for it. And in typical fashion lately, every time a banking executive or somebody from the government, anytime somebody goes out to reassure everybody that everything is okay, it has the opposite effect. Stop telling us how financially strong you are. It's not working. And here we go. They go to redeem their Tier 2 bonds early, and it causes an even bigger panic. Now, right now, Deutsche Bank shares, let's refresh, they're down 4.5%. So Deutsche Bank is clawing back. It was down 13, 14% at one point this morning. So it is coming back. It's not quite as bad. Moving on, other stories we got this morning. The Fed's balance sheet, this came out last night. We are right now at 8.7 trillion on the Fed's balance sheet. So last week, another, I think it was 96 or 94 billion was added to the Fed's balance sheet of not QE. All right. And everybody's out there arguing, is it QE? Is it not QE? Is it inflationary? Is it not inflationary? Forget that argument. The fact is, all of the crap assets in the world are being parked on the Fed's balance sheet again. And however they're doing it, whatever mechanism they're using to do it, whatever they're calling it, whatever word salad acronym they come up with, who cares what they call the facility? All of the crap is going on the Fed's balance sheet because the Fed is ballooning asset prices. They're supporting asset prices. They're trying to keep the value of these assets from falling, whether it's through buying them outright or borrowing against them at full market value. At full face value instead of what the market would sell it for is irrelevant. The Fed is propping up asset prices. So forget the QE, not QE debate that's going on FinTwit. Irrelevant. Moving on, another story today from another financially strong outfit. Binance halts deposits, withdrawals on glitch in spot trading. Okay, sure, why not? It's always down for maintenance, right? Don't they always go down for maintenance at just the right time? Cryptocurrency exchange Binance has paused deposits and withdrawals on its platform due to issues affecting its spot trading. Its chief executive Changpeng Zhou said in a tweet on Friday, initial analysis indicates matching engine encountered a bug on a trailing stop order. Oh, sure, okay. He said in tweet, adding that the pause was standard operating procedure. And once again, standard operating procedure, what is that? That is tech speak for all is well, remain calm, nothing to see here. Thank you again, Mr. Kevin Bacon, for your support of the channel. All right, now I'm sure this has nothing to do with this story. Yesterday, that Coinbase was warned by the SEC of potential securities charges. Coinbase was issued a Wells notice, which is the SEC's way of saying, hey, we're about to prosecute you. That came out yesterday because Coinbase, through their staking and through the trading of certain cryptocurrency assets that they're offering, the SEC is saying you're dealing in unregistered securities, you're breaking the law, and we're about to come after you. The SEC issued the crypto exchange Coinbase a Wells notice warning the exchange that it identified potential violations of U.S. securities laws. Coinbase said the warning wouldn't mean any changes to the exchange's current products or services. Coinbase is saying, SEC, we will fight you in court if you do this. So get ready to have this going on, folks, in the background. The notice is the second warning from the SEC to a crypto entity after a February notice to stablecoin issue Paxos. Well, right now, Bitcoin not really reacting too much. It's down a little bit right now, 27,832, down about $500 over the last 24 hours. All things considering, Bitcoin holding up pretty well at the moment. So there's your two big stories today, folks. It is going to be a big one today. We've got one of the biggest banks in Europe, Deutsche Bank. There's like 1.4 trillion euros in assets on the books over there. They're wobbly. They have not failed. I just want to emphasize that. They have not failed. Deutsche Bank is still operating. But to see a sell-off in the shares and a blowout in the CDS, that tells me Deutsche Bank is the next one on the list, the next battlefield, if you will, in this war that's going on in the financial system. Also, keep an eye on those regional U.S. banks. They were also selling off this morning. First Republic is probably the main front of the regional bank battlefield here in the U.S. And then, of course, crypto is now back in the headlines with Binance going down. So, folks, monetary conditions are tightening. Things are getting wobbly. Things are failing. Have a plan, folks. That's all I'm going to tell you. Have a plan just in case. Just in case a couple of days goes by where the credit cards and the debit cards don't work. Just be ready. Right? Have a plan like that. It's better to have it and not need it than to need it and not have it. I'm not saying it's going to get that bad, but let's be honest, it's the 2020s. Let's not rule anything out. All right, guys, I want to say thank you very much to everybody for watching today. Thank you very much to my Patreon supporters. By the way, guys, keep an eye on that Adderall shortage that we were talking about on Patreon on the Wednesday Zoom call. Do you think it's a coincidence that the medicine that helps us focus is suddenly in short supply when they want to be like, ooh, look at TikTok. Oh, look at the Trump story, or, oh, look at this story that's going on over here. Don't pay attention to our banks and our CBDCs and our total takeover of the financial system. Do you think the shortage of the medicine that helps us focus might have something to do with that? Shout out to my Patreon guys. You guys were all over that story on the Wednesday Zoom call this week, and I'm not sure it's unrelated to what's going on in the world right now. Also, hi, Mom. Hi, Dad. I love you guys. And I'll see you guys this afternoon on my weekly wrap-up live stream. Until next time, live small and dream big.